My name is Mitt, and I'm also one of the trustees at Foundation Capital. We launched our real estate platform about 3 years ago so that people just like yourself would be able to invest into real estate without doing any of the work yourselves. I myself started my career as a CPA, auditing publicly traded companies. Myself, Perin and Jeff, who are the trustees of Foundation Capital, came together. We had an accounting firm that was helping clients in the apartment real estate space, and we realized, hey, the numbers really make a lot of sense. We can do this. The thing is, for it to really justify itself, we've got to really scale it up and target a different asset size. Because when we first started, we were doing duplexes, triplexes, fourplexes, single family homes. It's just, in order for you to make a business out of it, it's very tough. You have to own a bunch of property and a lot of running around and a lot of headaches. And so we ended up focusing on apartment buildings that are in the 10 to 50 unit space. And the reason why we focus on that space is that there isn't large institutional owners of it. So there isn't large publicly traded REITs that own 100 of them and things like that, because for the size and management, it requires a lot of work and system and scale. And so what we do is we go and we buy apartment buildings in southwestern Ontario that are 10 to 50 units, typically older buildings from the 1970s, 80s. They'll have lower rents, typically as they are owned by mom and pops. Rents are anywhere between $600 to $800 a month. We go in, we offer them alternative housing solutions, we pay them money to leave, and if they're a problem tenant, we will seek vacancy through the landlord-tenant board. And we've been doing that to the point where typically on acquiring a building, we can get anywhere between 60 to 75% of building turnover within the first 2 years. And that's our bread and butter. Once we get the person out, we spend about $40,000 to $50,000 renovating that unit, and then are able to rent that unit for anywhere between $1,600 to $2,000 a month. So we're doing these turnovers to increase the rents monthly by $1,000. And you might think, well, how is that really going to make a lot of money? Well, in our space, when you turn over an apartment unit, the value of the building went for $1,000 increase, goes up anywhere between $200,000 to $250,000. And so what happens is investors pool their money with us. We go out, we buy a number of buildings, we turn over units. Then what we do is we go back to the bank and we refinance it. So now the bank says, or CMHC says, hey, you're at 250K value increase times, let's call it 8 units. All right, you created $2 million in value. All right, we will finance up to 75 to 85% loan to value. We'll typically do maybe 75. And so on that 2 million, we'll take out 1.5. But as you probably heard me say, it costs us about 50K to do the renovation. So on 8 units times 50, we spend 400K, but we're creating a $2 million value. And so when we refinance, we get 1.5 million, which we recover the 400K that we've spent, and an additional 1.1 million in capital. And then what we do is we utilize that capital towards either acquiring additional buildings, renovations on other units, or paying investors a one-time special distribution. So the properties themselves, when we acquire them, offer cash flow because we use CMHC financing. And so we offer a 7% distribution that's paid out on a monthly basis, and we target about 8% in appreciation. And the minimum invest with us is $10,000. So as an investor, when you invest into our fund, you're subscribing to units of the fund. And then every quarter we reevaluate where the buildings are with their performance. And based on that, there is share price increases that happen on a quarterly basis. When we started about 3 years ago, the share price was $10. Currently, it is $13. And we've been paying the 7% distribution without any fault. So that's how our business works.